Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, April the 28th, the year's 2020. Let's talk trading. Brain Management Part 1. A lot of times when we always talk about money and risk management. In fact, yesterday we did Walmall's 10-5-1, and that's a money management strategy. And we're going to come back to that probably later this week. And of course, we talk about risk management where, you're not going to lose any more on any one particular trade than you're willing to lose. But what we really need to talk about is brain management. Okay, now remember, boys and girls and non-binary traders, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. So, actually, this says pain management here. And by the way, I've got Walmart on the line.
Hello, guys. I hope you're all doing well, and been a profitable day for you. And let's go and talk about some brain management as opposed to pain management.
Right. Now, in fact, right before made this video, I made a comment to Walmart, and I said we were talking about a trade, and I think he mentioned how he doesn't like to go in on that first 5-minute candle. Well, I went in on the first 5-minute candle, and of course, it went against me, I don't know, about 4 or 5 pips before I exited with a profit. And Walmart was talking about, you had to experience that pain. And I said, well, Walmart, if I wasn't in the trade, would I experience any pain? He's like, well, no. But the thing is, why am I experiencing pain because price is moving against me? I'm doing it to myself. It's all in my brain. Isn't that right, Walmart?
Oh, absolutely. Why is it so? If we've set up our trading plan and we know what we're going to do, things are going to go against you, and we just have to go. And this game is more of a game of controlling what you think and how you think. And I don't mean in terms of strategy. I mean in terms of what you are doing to put in front of yourself so that you don't go and make bad decisions and go and veer off your plan. If you know that your plan is going to work long term, you stick with the plan. I'll give an analogy. You think about, when we first got into World War II. When we got into World War II, what happened? We took some meetings, but there was a plan there. There was a strategy there. And thank goodness, our generals in the U.S. went and kept to the plan. And, and by doing that, they were able to move forward and actually come to a victory.
Yeah. And you'll notice on the screen, FOMO, fear of missing out. But then I coined the term ROMO, it's the regret of missing out. Because, see, fear will get you in the trade possibly when you shouldn't. Okay?
Right.
Now, but the ROMO, the regret, what that does is after you've exited the trade, that might cause you to do something different in the future. And once again, these are two forms of pain that you're doing to yourself. The market, because if you're not in a trade, the market's doing what it's doing. So the thing is, it's like, like with Walmart's 10-5-1 method. I tried it on my first trade today. I went short the euro. I put the -10 stop loss in for me. I put in, I waited, and I was up, I think, +5 or 6. I moved to stop the BE +1. I had my take profit way down. I was looking for a return bar. But I got stopped out at break even +1. That's just how it works. So I left 5 or 6 pips on the table. But, does that mean I'm going to change anything? Not at all. No regret.
No, there's no regret, because overall, over the long term, it will work out. And the thing is, you put some money into the bank account.
Yeah, I mean, 10 times 1 is 10, right?
Exactly. It may take longer, but it gets you there. Yeah. That's all that matters, is getting you there.
Yeah, and of course there's somebody going to go, yeah, but what if you hit that -10? I mean, now you got to make 10-1 pippers. It's like,
Yep, that's part of trading, because here's the reality also is that, you could also just as easily on the 10-5-1 plan, the very next trade you could go and get 10 pips. I'm not trading anymore today because I've made my goal. But my very first trade today, I got 9.7 on the very first trade. What happened was I had my take profit at 10, but by the time I got the market let me out, it was 9.7. But that could happen in the very next trade. You can take a loss of 10, and the very next trade get to 10. And then find you starting all over. But you don't look at it that way. You look at it from the perspective of, hey, I'm profitable now.
yeah. And so the main point here is pain does not come from the market. Pain comes from your reaction to the market. And if you can embody that, if you can burn that in your brain, then maybe you can distance yourself mentally from the chart, and you can just focus on doing what you do. Because I had somebody else, contact me, and they were saying, hey, I'm a losing trader, I'm a struggling trader, help me. Well, I mean, it's real simple. Every trade you put your stop loss on, so you don't lose any more than you're willing to lose on that trade. And then as far as helping somebody, you know how we do it here. I mean, it's real simple. We're looking at horizontal line trades, and we can look at this wall mall trade right here this hour. You could have been in short at 80, and there were pips to be made here. And so you see here, if you went in on the first line, there was some pain, okay, and then it came back the other way. And what else can I do other than tell you to go short at the line here with the H1 candle color, or go long here at the line? There's no more real mentorship. We pick the time of day based on statistics we trade. We pick which pairs we trade based on statistics and things like spread. So I can tell you what pair to trade, what time of day to trade, but you have to get here and take the trade, because I can't click the mouse for you. And even if I could, I wouldn't, because then you wouldn't be learning how to trade. And it's like baseball, right? Wall mall, you can read all the books, watch all the videos on how to hit, but until you get in that batter's box and start swinging at the ball, you're never going to learn how to hit.
You can't learn to hit until you're sitting there and actually, or standing there and actually going and doing it. And that's the same thing, here with trading. You just got to get into the batter's box and do it, and the first thing, create your trading plan. Don't take what I say or what TRO says. Take it and watch it, observe it, put together your trading plan, and then trade it, and trade it, and trade it, and trade it. And maybe you have to start off with pennies on, and then you move up to dimes, and then you move up to dollars, and then you move up to tens. That's how you build confidence, because as you go and see that it actually does work out, the statistics are true, then you can build up and just get better and better. And yeah, you're going to take losses. I'm not saying that it's easy, but at the same time, you're the one who is putting the pain on yourself. You're the one that's upset, and it's because of what, the market didn't do it. You're putting the pain on yourself, and you know that you're going to take losses. How could you not take losses? This is, this is not a mechanism just to go and get rich quick. No, this is something that we have to work at and get good at. And part of that is taking losses. That's part of it. Today I've taken 3 trades. I'll disclose it right now. I got 9.7 on one. I got -3 on the second one, and I got 10.1 on the third trade. So I'm up 16.8 or 16.7 for the day. But I had to take that loss. But my trading plan said that if I go into profit, and then I go and goes against me, I get out. And that's just what my trading plan is. Now, here's the thing about it, and I can get, this whole thing of reacting and regret, is that trade where it went -3. If I would have stuck in it, in fact, I even, on a phone call prior to making this video, I had told Tierra if I had stuck in that trade, I would have gotten out with +10. I can't have regret about that. My trading plan is my trading plan, and that's just my rules that I have to follow, and we have to all put those in place.
Yeah, and I was thinking, using baseball analogies, one thing about, when you're up to the plate, you don't want to swing at a bad pitch. It's kind of like you don't want to take a bad trade. And a bad trade is a trade. We will define it as a trade where you're not following your trading plan.
That's exactly right. I was about to say exact same thing. A bad trade is not a trade that you lose money on. A bad trade is a trade where you didn't follow your rules.
Yeah, and on the flip side, a good trade, whether or not you made money, that doesn't make it a good trade. A good trade's where you followed your trading plan. Period.
And one of the things I do is I log every trade that I take. And a lot of times you'll look and say, I'll write right across the top of it in a big red pen, bad trade. And meanwhile, to the right of that, it says that I made, 5 pips or 10 pips. Why was it a bad trade? Because I didn't follow the rules. And I need to go point that stuff out to myself so I don't do that often, because over time, statistically, that will burn me. And then I will have some pain.
Yeah, I know, but like if I'm looking at the pound right now, and you look at the ranges over the last, this hour and the 4 preceding hours, the minimum was the last hour, 24 pips. So that price bar, that 1 hour bar, 1 hour candle. In fact, I can even switch over. I'll switch over to M30, so you get 2 bars per hour. You can see how those bars left these zones, every last one. So, once again, based on this simple method, of using these sweet spot lines and setting our buy triggers and sell triggers at these lines each and every hour, you can see how it can be profitable. And the thing is, the statistics tell you it's going to be profitable, but it's up to you to take the trade.
That's exactly right. The thing is, we talk about FOMO, and then we're talking about TRO's new phrase of regret of missing out. That can be just as paralyzing, is because what can happen is then you're afraid to go and do things that actually cycles back into your fear as well. So you can just cycle on top of itself, and then you're in a situation where you're making bad decision after bad decision, and then jumping into trades you shouldn't be jumping into. You're violating your rules, or you're not getting out. My question. And I question myself. I'm not questioning traders. I'm questioning all traders, including myself, is why is it so easy sometimes to ride a trade into a loss of minus 10 pips, yet at the same time, as soon as we go and see any profit, we're afraid to go and let it run to where it's supposed to run to.
I think once again that's part of that's the regret, because that's where the regret comes from, because you're actually doing a future regret. Oh, if I don't take these 5 pips now, I could lose them, and you don't want to feel that regret. And then so you're killing yourself, because you're going to regret you didn't take the 5, or you're going to regret you did take the 5. You're setting yourself up for pain.
You're setting yourself up for failure, really, in that sense, because, that's why I came up with my 10-5-1, was because the whole idea is that my rules are my rules. I follow my rules, and if I only get 1, that's wonderful. If I only get 5, that's wonderful. If I get to 10, that's even better. But you set yourself up for a positive outcome, and at the same time, if I go and get stopped out and I follow the rules, but I get stopped out, you know what? That's a positive outcome too, because I did what I was supposed to do, and in the long run, that's going to work well.
That's right, and you know what? Mal, the fastest 15 minutes is up again. So, fellow traders, we're going to definitely come back to brain management, probably tomorrow, maybe the next day. And so when you're out there, just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you're new, click subscribe, click like, click the bell, and share this video with your other trading buddies and other trading forums and platforms that you visit. TheRumpledOne signing out.